All right, everyone. So I've got a great recap for you today. We have a case study. Today's big stock went up over 300%. This was awesome. And what's really cool about today is that I followed the game plan that I laid out for you yesterday to a T. I mean, it was almost perfect execution. Now, there are things I can't control, like how strong the market's going to be, how big the biggest gapper is going to be, when things start to slow down. But responding to all of those variables, my trading performance today was solid. Locked up the daily goal here, first day of April. So let's go ahead and jump on to screen share, and we're going to go into the slide deck, and I'm going to go over my case study. Okay, so the stock that we're breaking down today is VSTE. When I looked at my scans, this was at 7:13 a.m. I pull up my scans on my phone. This is a screenshot from my phone. And I saw that VSTE was up 185%, which I was like, holy smokes, this thing is impressive. Price $8.82. So the next thing I did on my phone was to check the chart. And the reason I wanted to check the chart was because I wanted to see whether or not the stock was a buyout, which I mean, you never know. I just wanted to see, like, what's the chart showing me? Now, as it turns out, we did have a buyout today. The buyout was DOMA. DOMA up 33%. And if I pull up the chart on this, I'll just show you real quickly. So DOMA, there it is. This one trading, it's going to trade more or less sideways because the price has been determined. And so there's no volatility on it anymore, right? It pops up buyout, now it's sideways. So whenever there's a buyout, I'm like, all right, well, I'm not going to trade that. That's not going to give me really any profit opportunity. So the first thing I did on VSTE was I checked the chart. Now, the next thing I did after I saw that the chart was interesting was I checked the news. So generally the first step is just see the stock on your scanner and try to decide whether or not it's even worth looking at in more detail. And you could do that by either glancing at the chart or just even looking at the metrics on the scan. So for me, when I'm looking at a result on the scan, immediately, within seconds, this is what I'm doing. And let me just pull up my whiteboard here so we can get dialed in. So within seconds, this is the due diligence that I perform. Okay, so the first thing that I check, number one, is float. Because if the leading gapper has a float of 5 billion shares, I don't even have to look any further. I know that I'm not going to trade it. And it's probably a buyout if it's the leading gapper with a float that high. So the first thing I do is I check the float. And I want to see, ideally, that the float is under 20 million shares. And I'd prefer lower. Lower is better. So under 5 million is even better than under 20. Number two, I check the price. I want to see that the price is generally between, I prefer 5 and 10. That's sort of my sweet spot. If the price is like $40 a share, I'm just going to note this is going to carry a lot more risk to trade it. I don't know if I have the appetite for it. If the float is, if the price is like $1.15 or 80 cents or something, I just know that it's going to be cheap. It's going to be a little bit harder for me to make money on it because the range is going to be smaller. KB was mentioning today that he actually likes trading stocks with bigger range. And he's kind of like, sort of thought that maybe that was unusual to prefer a more volatile range. And I agree 100%. And the reason for me is that when a stock is grinding in a small range, you know, and this is very common with low price stocks under $3 a share and under $5 a share even, you know, your best case scenario is that it's going to go up maybe 10, 15 cents. It just feels like, is that even worth it? Because at any time it could jackknife and flush 30 cents. So it feels like you've got more downside than upside. Whereas some of these higher price stocks, you know, if it breaks this critical level, it could go up 50 cents or $1 a share. That's a pretty juicy return. That's something to get excited about. Okay, so as I'm looking at the scanner, the first thing I'm looking at is, I also, of course, check the percentage gap. So I'll just write that down here. You know, percentage gap. If it's only like 15 to 30%, I almost don't even pull up the chart. I'm like, this is boring. So to get me excited, what I need to see is that the gap is 50% and higher. 100% is going to get me really excited. I'm going to come running over to my desk if I see on my phone that something's up 100%. A float of under 1 million is going to get me really excited. Under 5 million is like, okay, that's interesting. Price, just 5 to 10 is ideal. And then number 4, the next thing here is trying to figure out the news. And then number 5 is looking at the intraday chart. So when I pull up the news on this, I don't see that there's a fresh headline. There was some news from last week, but it didn't really substantiate this just squeezing up 300% today. So I was like, I don't know, I'm just not sure that this is something I can feel good about from a news perspective. So that made me a little bit nervous. All right, so there's no clear headline, but it's up 300%. So I checked the chart. And the first thing I noticed on the chart is that this is a chart that we would identify as a recent IPO. So recent IPOs are daily chart patterns that I really like because its all-time high is right here at 14. And what usually happens with these is they open, they'll sell off for a period, and then the company will start putting out some good news, and this is where we can have a turnaround story. And today's pretty incredible that we went all the way up to just about $14 a share. I mean, that is a huge move. It's 300%. That's great. So that doesn't always happen, but the thing about this is that above 14, it's blue sky. There's no resistance. However, you can have insiders who will want to sell. Now, there are lockup terms for insiders, which is one of the reasons I like recent IPOs, but often it's like 90 days. Sometimes it's longer, 6 months, but we're past 90 days here. So it wouldn't be surprising if we saw some selling today from those insiders. Okay, so that's the daily chart. All right, so the daily chart checks out on this one. I'm like, daily chart, I like it. So then I'm looking at the intraday chart, right? And what I see on this is that it spiked from $4 to 13 in one 5-minute candle that had about 80,000 shares of volume. So here's the problem with that. We'll get the whiteboard out here again. So the problem with that kind of move is when you have a stock that goes up that much, that quickly, often they have a hard time sustaining that level. So let's see. So we go basically straight up here like this. And our 9 moving average, well, that's way down here, right? Volume weighted average price sometimes will be actually, kind of like this. And the reason this happens is because this is just all of a sudden when the volume comes in, it moves the VWAP higher, but the 9 moving average is quite a bit lower. So usually these need to have a period of pulling back. And typically I like buying a dip when it comes down to the 9 for the curl back up, right? But unfortunately here, we'd like to pull back to the 9, but the 9's still way down here. So when I'm looking at this chart, that's the thing I'm thinking is, well, geez, look at the 9 moving average. It's below $8. The VWAP is way up here. It's too extended. I don't think I can get in here and expect the first candle to make a new high. And I didn't trade this move right here. The volume was super light, as you can see, and the spreads were huge and the risk was too high given that it had no news, right? So we end up pulling back. So total profit 6,100, and I think I was up at 6,400 and finished at 5,400, but this was where I grabbed that screenshot. So 6,100. And look at how when we finally came down to our 9 moving average, that's when we ended up having support. But what I'll tell you is that I was looking at this pattern here, and I was sort of saying to myself, I'll pull up the VSTE chart here. So I was looking at that pattern on the 5-minute, and I was like really trying to ask myself, like, what do I think about this pattern? So let's go back to here. So first candle pops up, right? So we got our first candle pops up. Second candle's red. Pops up, 11, 8, big range. Pulls back again. I'm watching it here, and I'm like, I can't. And then all of a sudden flushes. It breaks below VWAP, goes down to 8. Goes sort of sideways here. And right in this area, I was like, what do I think of this pattern? And I was thinking to myself, well, we've got resistance at the volume weighted average price here at 920. We've got 950, which is sort of $0.50 maybe resistance, and then we have resistance at 10. If we get back above 10, then it starts to look better for a move higher. But do I want to buy it down in this area? So I was watching it at $9.15, and I was really close to buying it, and I was just like, I don't know. I don't know if I like this. It pops up to 950, hits a high of 958, and on this little micro pullback, I got in, and we got to squeeze up to 10, as you could see right here. And then it pulls back, and as it broke over 10, I added back, and we got squeezed to 11, and then it reverses and drops back down. So at the end of these 2 or 3 trades, I was up $1,000. And I was like, you know what? I was capped. So, and here's the thing. On this trade here, I got in as it broke 1020 right there, about 1038. And I took 2,500 shares. And then I added another 2,500, so I had 5,000 shares. And I was up 40 cents a share when it hit 1098. I was up $2,000 unrealized. But I didn't take it off the table because I was like, well, hold on. This looks like if this breaks this level, now we're going up here. So I was like, let me give it a second. And then it reversed really fast, dropped down. So one of the things that I said yesterday during my game plan was that my first goal for this morning would be to try to get myself up $1,000 on the day. Once I'm up $1,000 on the day, then if it happens relatively quickly, I will increase my share size and try to scale in, see if I can hit my daily goal. And then once I hit my daily goal, if it's really hot, I'm going to keep going. But once I get close to the end of my window, when I usually make the most money, I'm going to bring my share size back down, because if I take a loss towards the end of the window, I won't have time to recoup the loss. So I started this morning with a cap of 5,000 shares on my first 3 trades, and I got myself up $1,000. And then I lifted the cap to 10,000 shares. And I said, I'm going to keep trading it, but I'm going to increase my share size. So it ends up going sideways here. And then as it comes back up, I got back in and we squeezed back up to 11, micro pullback up to 1150, micro pullback up to 12. Super solid. And right there, I made about $5,000. So that put me up 6,400 on the day. It then pulls back a little bit. I got one trade up here where I bought for the break higher. I was looking for the squeeze up to 13. I lost 500 on that. So then I was up 5,900. And then I had a trade, I think it was down in here, a dip trade, got back up to 6,100. And then at the open, took a trade for the break, red to green move, and lost 500. I'm at, I think, 5,900 or 5,400 in total profit on VSTE. So overall, I traded it pretty well, and I followed the rules today really to a T. I started with small size, and then, so by the way, once we got up to 9 a.m. at the top of the hour, I was like, all right, well, my window kind of closes at like 10 a.m., definitely by 11, and I'm at the daily goal, above the daily goal, and it's the first day of the new month. Also, for what it's worth, I hit my daily goal the last 2 days in a row, and then gave back like 70% of it. That happened last Wednesday and it happened last Thursday. So I was like, I don't want to do that again today. This is getting a little annoying. So I'm going to bring my share size back down to a cap of 5,000 shares for the rest of the day. And I didn't actually trade even with that much size as I continued trading, but nonetheless. So finishing the day at about $4,962 and I think 53 cents or something like that. So a really solid green day, just a smidge under the daily goal, but we'll round up, call it a daily goal, $5,000. And VSTE was the best one. Now at this point right now, this is looking like a head and shoulders kind of pattern, which is going to probably come back down. That's usually how these work. So I think that I did well enough on it. I don't feel the need to overstay my welcome at the beginning of the new month. I'm grateful for the green day. $5,000 is great. Always a little disappointing to give back some profit at the open, and that is what happened to me. I had, it was a total of 3 trades at the open, or maybe 4, and they were all red. Fortunately, they were all with small size, so I only gave back like $1,300 total from my peak, maybe $1,400. But still, it's a little annoying to have 3 losses in a row. So the second I start to feel a little annoyed, I'm like, okay, I'm aware right now that I'm feeling a little annoyed. And I realize that if I take another loss, I'm going to be fairly triggered. This right now is the time to walk away. This is the time to be grateful. So I had said for the month of March, when I was talking about my performance, I said that I was left feeling a little bit frustrated because, as you might recall, for those of you who have been tuning in for daily recaps for quite some time, I had a really good start to March, and then I actually gave back all of it, which was terrible. And then I rallied back up here, and then I gave back a little bit more. And so I finished the month right about here, which was about 18,000 in gross profit and about 10,000 in net profit after fees and commissions, which, let's be honest, considering I made almost $120,000 in February, 10 grand is nothing. It might as well be a break even month. So I'm like, all right, well, what's the cause of that? 4 red days where the cumulative losses were nearly 40 grand because I got frustrated, I got stubborn, and I had a couple of days where I had emotional hijack. And that's when you just give up the rules and you just start trading from emotion. And it can be very dangerous when that happens. So my goal for the month of April is to try to get through the whole month without having any emotional hijack. Okay, that's a good goal to have, but I was like, how do I achieve it? Because I never intend to have an episode of emotional hijack, right? You don't intend for that to happen, but it happens anyways. So, I'm still trying to think about what I can do to help keep myself calm, cool, and collected every single day through the month of April. We've got 20 trading days approximately, and that means each day I can't have even one slip up, because a big slip up when it comes to emotional hijack can cost tens of thousands of dollars. So I need to be on my game every single day. There were a few days in March where I came in and I was sick. I spent most of the month of March being under the weather, which was unfortunate. I also had some days where I came in where I didn't sleep well at all. And I feel like maybe I should have been a little bit more honest with myself. Like, I'm not feeling like 100%. And, if you go out on a performance sport, like on the golf course or on the basketball court or whatever, you go out in the field and you're not 100%, it's not realistic to have the same expectations of yourself or to try to push yourself as hard as when you're at full capacity. And, some of these things are out of our control. So I think I should have done a better job sort of recognizing and acknowledging where I was at on those individual days and cutting myself a little slack and making the sort of proactive step of applying some guardrails and reducing my size. So that question I often ask, did you eat well? Did you sleep well? Do you have a couple stocks on watch that you like? And if you do, what's the condition of the overall market? So when I came in today, to be honest, it's a 3-day weekend, I felt a little tired. All right, so I felt a little tired. Did I sleep well? Yeah, but I just still felt a little tired. What's the condition of the overall? Did I eat well? Well, right now I am not eating breakfast, so that's sort of a separate thing. But that's not unusual for me. That's normal, so that's fine. This is the question that I always ask people, though, in general. So then, do I have a couple stocks I like? And I was like, I like VSTE, but what's the condition of the overall market? And I'm like, this is where I'm a little nervous because the last few days, last week, I had a red day Monday, Tuesday, and then Wednesday, Thursday were green days, but both days I hit my daily goal and then gave a lot back. So I was like, feeling a little gun shy, a little bit nervous. But I said, well, this is why we're going to start by breaking the ice with small size. Because the worst thing I can do here Monday morning at the beginning of the new month is take a big loss on my first trade. Take 10,000 shares on the first trade and lose $1 a share and I'm down 10 grand. That would be so emotionally devastating. I would be like, I will give anything to have an undo or to a redo, like undo that last trade, like a redo. But that doesn't work in the market. It doesn't work that way. So I was very much thinking about that. And I was like, let's just follow the rules that I laid out yesterday. Start slow, build a cushion. Once I have the cushion, scale up. So I kind of expected today that my my position sizing would be kind of like this, starting at 5,000 share max size, going up to a peak of 10 to 15,000 shares, 10 to 15,000 shares, depending on how strong the market was and how big my cushion was. And then bringing it back down to anywhere from 7,000 to, 3,000 shares as I kind of scale down, right? So these are all sort of moving targets. And so I got 1, 2, 3 trades here, got my cushion of $1,000, and then right away moved this up. In this area, I built a cushion of, or made a profit of about five, I guess it was probably $5,000. And then in this area here, when I was in the scale down spot, I lost about 1,200, something like that, 1,400, whatever. It doesn't really matter. And so thank goodness that I made that scale down, because if I kept at that size, I would have given back half, maybe more, right? I probably would have given back almost, more than half. So this is how today played out. And like, this is how the P&L played out, which is sort of a little bit out of my control because it's the condition of the overall market. But the share size, the sizing strategy, position management was really solid. And so that gave me a P&L where I kind of started, went up, and then came down just like a little bit, right? Just maybe like that. And I would say that's okay. So trade 1, trade 2, trade 3, trade 4, trade 5, trade 6, 7, 8, something like that, right? So this is a good day. I'm happy with this type of P&L, and I want to try to do it again tomorrow. So all I have to do is sit down tomorrow with the same intention that my first order of business is building the cushion, building the goal, right? But start building the cushion, not the goal, and doing that with small size. Now, if tomorrow, let's just say I start with, my 5,000 share max size cap, and in my first trade, I lose 250. And then on my, second trade, I lose another 250. I'm down 500 on the day. And then I have a winner and I'm up 700. Am I going to increase my share size here, or I'm up net 200? No, I'm not going to increase my share size. If I can't even get myself up $1,000 in profit, there's no reason to increase my share size, right? If I'm already struggling. But if I could start to get the cushion, first trade, second trade, then that's when I'm going to move the size up, try to scale up. And then the question of when to bring it down right now is something that I've kind of struggled with, because as I was saying, for the month of March, I had a couple days where I felt like I was, in the zone. So I was continuing to trade aggressively, and then it was like a rug pull and I gave back more than half in one trade. So for right now, based on time of day, I'm bringing the size back down, just knowing that my window is closing. And if I make a mistake, I won't have time to recover. And it's as simple as that. So this is kind of a good way of making this a little bit more systematic with my scaling. And hopefully that is able to keep me so I'm constantly trading, from a position of confidence. Starting with small size can give me confidence because I break the ice, or if I lose, I'm not rattled. And then if I'm doing well, leaning into it, and then easing off towards the end of the day so I can end the day strong. Because even though I gave back a little bit on those last 3 trades, like I've already said that when I have a big red day, I can be totally like, I forgot about it within like 2 days. So how long do you think it's going to take for me to forget like 3 little losses off the top? I'm going to forget about that within like 2 hours, right? It's gone. So I just have to be able to sort of lock it up, set it aside, and move forward. Now, one thing that I do have queued up for myself is on a day where I'm feeling a little bit more emotional, I got a couple of guided meditations that I did during the month of March that really helped me kind of calm down. So I sort of have those queued up, and my thought was I want to do one meditation, at least one a day for the whole month of April. And if I have a day where I start to get really angry, I want to stop trading immediately, do that meditation, bring myself right back down. In a way, I feel like the brain starts to have this neuro pathway of like loss, anger, reaction, and I need to interrupt that as quickly as possible and sort of develop better awareness that I'm going down that path, so I can create this new pathway that's like loss, walk away, stop looking, don't care. that doesn't become this like emotional cycle. So I have a guided meditation that I'm going to be doing on days where I feel myself getting frustrated, and I want to try to walk away earlier before I cross that sort of point of no return. And then at night, or maybe in the mornings, I'm not sure. I did the meditations, yeah, at night these last few days, but possibly before trading, if I have time, is to do meditations on patience, being patient with the drawdown that I'm currently in. I've been in a drawdown now for like 3 weeks. It's kind of a drag, you know. I dropped to the low and I've been rallying back up. So it's like one really bad week and then a couple weeks of rallying, but still net, still, you know, in a little bit of a drawdown. So I have to be patient with that. Also be patient with the market, be patient for waiting for good quality setups. Because it's possible today, if we didn't have VSTE, you know, CXAI, I'll talk about that in a second, but if we didn't have either of those, there would have been nothing to trade. None of these were good for me. I didn't like the prices. They, you know, one was a buyout. I didn't like the flow. It's just none of these were good. Now, VSTE, because the stock was up, I got some trades on it. But if this one just wasn't here today, I wouldn't have had that profit. CXAI, I didn't end up trading this one. When this one hit my scanners at 9:05, 9 a.m., I already had built my cushion, and I looked at it and it was coming right up to the 200 moving average. So I thought it was going to have resistance there. And I was sort of like, I don't know, the price is a little lower at 3. The float is 10 million shares. It's not jumping out to me as being super, super exciting. And it's only up like maybe 30% initially. So this is where I sort of started watching it. And I was like, I don't know. It kind of broke and sort of dropped. There were a lot of big sellers right away. As the tape started looking kind of thick. And then when it punched higher here, I was like, okay, well, that's cool. But, you know, I don't know. This is sort of gets to what KB was saying, where the total range wasn't huge. But, you know, as the day has gone on, it's continued to kind of grind higher and higher. At the open, I was focusing on VSTE. We had this sort of bigger drop here. This was a higher volume candle. Anyways, so, you know, in hindsight, I left some money on the table, not trading it, but I didn't break the ice. And then sometimes when you don't have that icebreaker trade, it feels really hard to break the ice when it is way up here, like for your first trade. So sometimes it's just like, ah, shoot. So anyways, all that was to say that it's possible I'll sit down tomorrow and there'll be nothing that looks good. And if that's the case, I need to be patient. I need to just be calm. And it's totally okay to have a no trade day. If nothing is really solid, I'd rather not trade at all than take a low quality setup. So I hope this has been a helpful recap. I hope a helpful case study. As always, I hope you hit that thumbs up. I hope you are subscribed to the channel, and I will be back for the recap tomorrow. And make sure you stay tuned for some new episodes coming to YouTube this week. All right, I'll see you guys soon.